All right, so let's go ahead and get started. And I'm going to ask you to see this S&P chart, and the question is, did this method warn about this decline? Does anybody know the answer to that question? Because I know some of you are probably my subscribers. Yes. Yeah, it has to be yes. Okay, you should be seeing the chart of S&P cash, the daily chart. Yeah, so there is something that did warn of this, and this is something that had been posted, I'm pretty sure, on Twitter. I know that I posted it for thestreet.com. I know all my subscribers had it, and I know I talked about it in the trading room. So one of the things that I'll share with you is I didn't know that we were going to be putting in a major high, okay? But I did know that we had time resistance to the rally, and I knew that this market was extended. And when markets are extended, they're in the position for a deeper downside correction. It doesn't mean that it's always going to happen, but it is in the position. So that's when you anticipate that possibility. And the reason why we were anticipating it, even though for, quite a few months and years, we really haven't seen much on the downside at all. This is what we had. We had prior high to high swings here. So this high to high was 24 weeks, which was similar to this high to high cycle, which was 23 weeks, which was also similar to this prior high to high, or the high to high into the high was 24 weeks, which is equal to this swing and similar to that swing in time. There were also some other cycles that showed up in the month of January. One was a prior major high to high, and that came in the week ending January 12th. And then, let's see, here was the other one that was a low to low cycle, 100% in time, came in January 19th. So there were some warning signs that you would have found with this method, okay? So I know that there were some people that just decided to go to cash in this time window. Anyway, let's see what else we have. Okay, actually, this was one of the trade setups that we had today. Now, just to get you a little bit excited about what is potentially, or what can potentially happen with this work, is we had a little bit of a two-step pattern setup in the trading room. This was actually done on a 5-minute chart. This was today. There might even be some of the people in here, that may have taken this trade. And what happened was we held the zone. We did break the slight top end of the zone. I actually did the free video on this one today. So there was a top end of the zone and the lower end of the zone. The lower end held. It triggered an entry, and then it made 2 targets on the upside. But what's so insane about this move is, since all the volatility has come back into the market, even though this just looks like maybe a minor pullback on a 5-minute chart, look at the rally that was seen off of this area. Okay, 191.75. That's why I was saying, am I hallucinating? I mean, this is insane. But that was a trade setup that we had today. And I know some of the people in the trading room took 10 points. Some people took 40 points. It just depends on, how much you were willing to sit through and how you managed the actual trade. So let's see, what else do we have here? The only other thing I wanted to show you before I started and went back to the basics of the presentation is what I like to call a trigger. Because the way that you make money with my work is setup plus trigger equals trade entry, and then you manage it. This was the setup. It was the zone of support to look for a buy entry against. And then the next chart is actually an example of a buy trigger that occurred that told you it was okay to place a bet against that support. So it was a 233 tick chart in NASDAQ futures this morning. This was when it was testing that key support decision here. And then the signal was essentially when I had the 834 EMA crossover to the upside. And in the process, we took out a prior swing high. Okay, because I like to see a pattern shift, you know, that tells you that it's worth placing a bet, because we're looking for a change in trend. So when it goes from a pattern of lower lows and lower highs to potentially higher highs and higher lows because we've taken out a prior swing high, that's exactly what we want to see along with the moving average crossover. And there was a squeeze too. Oh yeah, there was a squeeze actually on this chart. All right, so that's what we saw today. So that is what is possible with this work. But now let's just go through and let's start from the beginning. So why would anybody want to try to use this type of Fibonacci analysis? And that's because it enables you to identify high probability, relatively low risk setups where the risk is clearly defined along with the targets for the trade setup, okay? As far as this work is concerned, it works on any time frame data and essentially any good market data. So for example, you know, obviously you can do the S&P and the NASDAQ, and you can do, you know, Apple and some of the major stocks, and also, you know, Forex markets and other futures markets. Those work very well. But I wouldn't be able to do this analysis if it was an IPO where I didn't have any back data. And I wouldn't really be able to do the analysis if there's not, you know, enough back data, or it's very, you know, spotty kind of data. Okay. I have in the past applied this method to stocks, ETFs, futures, and the Forex markets. It's an excellent methodology to use with options strategies. Okay. I'm in the options, you know, trading room during the day, and I would say probably 80% of my subscribers are using options, and they're probably not doing too much as far as the stocks or ETFs outright, because, you know, the options, you know, definitely give you a little bit of an edge. And also with this method, you can see things in the market that you will never ever see using indicators alone. Okay, you have to run the levels to see these setups, and you just won't find the same stuff using anything else. Just a basic, as far as the Fibonacci number series, many of you are probably familiar with it, but you know, it's all based on the Fibonacci number series. And this is the series where basically you get the next number by adding, you know, the prior to the next. So 3 plus 5 is 8. That's the next number in the series. 8 plus 13 is 21. 21 and 34 is 55. And you take that out into, you know, infinity. Okay. But what's most important about this is, you know, not the actual Fibonacci number series, because I will use those numbers for moving averages. But what I apply to the market are the ratios that are derived from the Fibonacci number series. Okay. So what you'll find inside the number series is basically the golden ratio, you know, 618 or 1618. All right. So the ones that I typically use every single day and that I focus on, you know, 382, 50%, 618, 786, 100%, 1.272, 1.618. Occasionally, I will use these other ratios as either a confirming ratio, or 2618 you will also get to know as my target number 3 for any of the trend trade setups. Okay. All right. Now, I told you about where 618 came from. You know, it's inside or in between those numbers. But what about all those other ratios? Where the heck do they come from? Well, they're all related mathematically. Okay, so for example, the square root, take a calculator and just do the square root of 618 and you'll get 786. Square root of 1618 is 1272. Another fun fact that I found way back when in the book called Geometry of Markets is the base to the height of the Pyramid of Giza is 1.272. Okay, Some of the other ratios, you know, so the 1 minus the 618 will give you the 382. You know, 1618 is pretty much the expansion of 618 and all that good stuff. But they're all related mathematically, and those are all the ratios that I'm applying. Now, I use 3 different types of price relationships. The first one, many of you may be familiar with, and it's called the Fibonacci price retracement. And this is where, you know, for possible support, I'm running low to high swings on the charts using these ratios, 382, 50%, 618, and 786, looking for possible support. So any of the lows to highs on the chart, that's for potential support. For possible resistance, you just do it on the flip side. I'm using the same exact ratios, but I'm measuring prior high to low swings and running those same ratios for potential resistance. Okay, so that's retracements. That's just one of the price relationships that I use and apply. Here's a couple of examples. You know, if you haven't seen them, you know, we'll start here, but after we get through a few of these, we'll get a little bit more involved in some of the fancier stuff here. But just to show you a basic retracement, here's where you're going to measure a prior low to high swing on this chart. And there are so many programs that will at least do the basic retracements for you. Now, when you pull back, you're going to look for possible support at these ratios. But the question is going to come up, you know, which one do you trade against? Because you certainly don't want to buy it here, stop it out, buy it here, stop it out, buy it here, stop it out. Oh, wow, we're finally held, right? You don't want to do it that way. So there are definitely tricks to help you decide which one you trade against. And, you know, one of the clues is that one way is with triggers. That tells you that it's worth placing a bet. And another will be when we can actually run price clusters. Okay, so that's a retracement of a prior low to high. Here's an example of a retracement for resistance of a prior high to low. This is actually a 45-minute chart of S&P futures. It's actually a pretty old chart, but here, no resistance here, no resistance here. You did have some resistance at the 50%, okay? So there's got to be something more to this to make it work better than just looking at single retracements, right? So let's look at the next type of price relationship. And that's what I call a Fibonacci price extension. Now, a price extension is essentially retracement beyond 100%. You're still going to use 2 points to try and set up possible support or possible resistance. This prior low to this high, I'm going to extend beyond 100% using the ratios of 1.272 and 1.618 to look for possible support down here. Or I'm going to run a prior high to low, extend upwards using the same ratios, looking for possible resistance. Okay, so here's a couple of examples of those. I actually added a few new examples recently, and you can go back and check this on your own. This is a weekly chart of CMG. So I don't know how many of you are familiar with, you know, trading stocks. You might be, you know, trading S&Ps or something like that, but this works on pretty much everything. And what I did find was that many moves tend to terminate at extensions of prior swings. So in this case, if you measure the prior major low to high swing in CMG, and this was a huge rally of $146. And if you ran the extensions, we knew where to anticipate a possible reversal. Well, we didn't really see a reversal around the 1272. So the next area that I was really going to focus on was this 262.71 area, which was the 1618 extension of that swing. So the math works like this. If you took this 146.04 and you multiplied that by 1.618, and then you subtracted that from the high, you're going to get 262.71. In this case, the actual low was made at 263, you know, and since then, you know, we did see, you know, a nice rally. Well, the initial rally for when I took the snapshot of this, from that low, you did see an $82 rally. Okay, I forgot what happened after, I think we just had earnings on this yesterday. Anyway, that's a good example of an extension. This next chart is Facebook. This is a daily chart, and this is actually going to show you a couple of examples of extensions of prior swings. For example, I took a prior high to a low, and I ran those extensions, the 1272 and the 1618, and you'll notice that twice, actually, this market repelled right around that 1272 extension. You got a nice pullback when you got to that extension. You got another one right here. Okay. Now here's another swing where you took the prior high to low and ran the extensions. Okay. So you're just using 2 points again, the high to the low. And let's see, we didn't really see any kind of reversal around the 1272 extension, but you did see a healthy top put in at the 1618. This is one of the reasons why anytime we get at least to the 1272 extension, you're going to hear me say, ratchet up your stops. Many moves tend to terminate at extensions of prior swings, and, to protect yourself. Okay. Just like where we're at in the market in general recently before this healthy pullback. All right, let's look at a couple more. Here's another example of a price extension. This is in the stock of Intel. This was a daily chart. If you measured the prior high to low swing and extended upwards for possible resistance, we did see one extension that came in at the 49.05 area. We saw the 1618 extension come in at the 50.85 area. So 1272 really didn't produce any type of reversal, but we got to the 1618. And in this case, it was exactly to the penny, 50.85 and 50.85. Okay. And then from there, you did see a decline of $5.80. So these extensions are worth watching. Now that's just the extensions by itself. We're going to combine everything together. All right, let's try the next price relationship that I use is what I like to call Fibonacci price projection. Okay, now in this case, you actually use 3 points on the chart to identify the support or resistance decision. Now, the reason why this will or can get confusing is that some of the other programs that we use, like Thinkorswim, will call this tool that allows you to choose 3 points, they'll call it an extension tool. So that's why people will get it confused with, the extension that I run with the 2-pointed tool. It doesn't matter what you call it. What matters is that when you're running projections for possible resistance, that you're using the tool that allows you to choose 3 points, and it's going to be different for each program. Okay, my program, I do use the Dynamic Trader software created by Robert Miner, and he was my mentor. And that calls it an alternate price projection. Okay, but I know that on Thinkorswim it calls the tool the extension tool. Anyway, in this case, what we're doing is we're measuring or we're comparing swings in the same direction. So I'm measuring a prior low to high swing, and then I will compare it to another low to high swing. Okay, so you need 3 points because you have to project from this low right here, or the third point. Now, when I'm measuring from 3 points and running these projections, I always use 100%, especially for what I like to call symmetrical projections. And I sometimes use 1.618. There might be others that will also use 1272 or 1.382. I really haven't found the need for that because I never run out of setups, and I just use these 2 main ones here, and that gives me enough setups. And I have never ever run out of setups. I've been doing this work since after the crash of '87. I met my mentor in, I believe, '88. By '89, I was doing the work, and shortly thereafter, people just started offering me money for it. So I decided to go into business for myself. This was never planned. But anyway, go back to the price projections. If I'm going to project a low to high from another low, I'm going to look for possible resistance at this ratio and this ratio. If I'm projecting a prior high to low from another high, I'm going to look for possible support using those same ratios. All right, let's look at a couple of examples there. Now, here's a recent one that you can actually go back and check yourself. This is actually the February crude. This is also an example of what I call symmetry. Okay, it's a price projection. And in this case, what I did, I'm only showing you one of them here because there are actually quite a few more that overlap this area. But just to show you an example of symmetry, this prior high to low swing was $3.12. I projected that from the third point. That gave me 55.87 for possible support. The actual low in this case was made at 55.88 within a penny. Okay, so you basically had a decline of 312, which was almost equal to this decline of 311 that identified this area as possible support. Okay. It did also beautifully overlap these other areas because you had some other similar swings here. You'll see, 333, 357, 350. We had other swings that were similar to others, and you had a really nice zone to watch and anticipate the reversal back up in crude. And that was definitely a beautiful setup. All right, I'm going to give you another example of symmetry, and it doesn't always repeat itself, but it does show up often enough that you want to run these projections. Okay, so for example, this is a weekly chart of Amazon, and I measured the low to high swings, and I found this to be very interesting because this rally swing was $373.21. And this rally swing, because you projected it from this third point here, gave you a resistance of 1083.31, the actual high 1083.31, 373.21. You can't make this stuff up. Like I said, it's not always going to repeat exactly. Actually, this swing was way more than this. But did I watch when it got up to that general area for possible resistance? Yes. Did it knock you out of the market? No, not necessarily. But you do anticipate the possible reversals around these projections. All right, let's look at another example using a projection where not only do you use the 100%, this is an S&P chart, a 5-minute chart, measuring a low to high and then projecting from another low. The 100% projection really didn't produce any change at all, but the 1618 projection pretty much put in the top before you had a nice sell-off. Okay, so that's why we watch these areas. We never know which of these areas, will top the market or turn the market. So we do coordinate this with other things. We coordinate this with other price relationships, and then we also use triggers. Now, I'll be taking questions after the presentation because I just don't want to get sidetracked here. So I will get to those. All right, here's another really good example of a projection, which is also symmetry. So the definition of symmetry is actually similarity or equality when comparing swings in the same direction. And you'll notice things like this. They're not always going to be equal or to the same tick. But if you see that there are quite a few moves that are between 25 or 23 to 25 dollars or 25.47 looks like the high, you're going to want to watch those projections for a possible termination of the decline. Okay, it's going to be very helpful, especially if you coordinate it with the triggers or signals. All right, let's look at, well, my most powerful trade setup is called a Fibonacci price cluster. The definition is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. Okay, so I like to see at least 3 price relationships. That makes a cluster. So we're going to start by looking at a blank chart, and I'm going to have to say this is it's a trick question. So was there an obvious reason to look at a short in Twitter late October? And this is, an old example, but it's just a really good one. So nobody's supposed to have an answer really for this question. I mean, you might think that you do, and that's fine. But beyond doing the work with the fibs, I really didn't have any reason to look for a short. But this is the same chart. And if you measured a prior high to low swing, and this is where we're doing multiple price relationships on a chart looking for clusters or the coincidence of at least 3 price relationships. So the retracement came in at 3202. Well, you know, that's one level. There are some people that'll just use that and say, well, I'm going to short it there. That's fine. But I like to see more. This is the same chart, daily chart of Twitter. I took a prior high to low swing that I found, and I ran the extensions. And I found that the 1272 extension of this swing was close to where the other stuff came in. So 3231 was a 1272 extension. So now I have 2 price relationships in that area. Then this is the same exact chart. Then if you measured a low to a high and projected from another low, that gave you 3233. Okay, so that was a 100% projection. That's something that you run with the tool that allows you to choose 3 points. And now we have 3 price relationships. And here's the 4th one. So we had 3 is enough for a cluster, but you know, I like to see as much confirmation as I can get. So in this case, I also ran a high to a low swing here and ran the extension, and we had a 1618 extension at 3188. So now you can see that there have been 4 price relationships that came in between 3188 to 3233. So I knew it was a price cluster of resistance, and that if we could not clear this area, we could look for a sell trigger, and then we can define our risk above the high that was made prior to the sell signal, which would have been above 3187, or above the high end of the cluster if you want to give it a little bit more room. So that's your choice as far as stops. Typically, the target that we look for when that happens, and you can actually go back, as long as you have enough data, you can go back and recreate this setup, and you'll, you know, prove it to yourself. Don't believe me just because I'm up here telling you this stuff. You know, just check it out for yourself. So typically what we'd look for in a target is the 1272 extension. In that case, it was 1806. Honestly, it may have made that target later. But this, again, the idea of this chart was just to show you that we had the confluence of 4 price relationships that made it stronger than just looking at a single retracement or a single extension or a single projection. It made it more powerful as far as the setup. Okay, so one of the things that I remind my traders, not every day, but every once in a while, is that nobody really knows where the market's going to go. We have educated guesses because we look at past patterns, and you know, they don't always repeat themselves, but you will find patterns that do repeat themselves more often than not. So it's worth looking at those. But do we really know where the market's going to go? Hell no. Okay, so the way that I tell my subscribers to make money is setup plus trigger equals trade entry, and then you manage. That's basically the formula. Okay, so the trade setup, that is where I have the, you know, price cluster decision or the symmetry support or resistance decision. That's the setup. The trigger is essentially the price action that tells you that it's worth placing a bet against the zone, because there will be many, many, many setups that will never trigger an entry. So the trigger essentially helps filter out some of these zones that have no value at all. Okay. So if a setup plus a trigger equals a trade entry, then a setup without a trigger, no trade entry. Okay. There are some other ways that some of my traders will just use the zones, and they're going to not wait for a trigger because they're just going to place a bet against the zone and do a you know, credit spread or something like that. But if you are new to my work, I highly, highly recommend that you wait for a trigger. Okay. And if you want a good example of a trigger, my free video that's on Twitter tonight is a good example. It's also on YouTube under the Simpler Trading group. Now, the trigger, again, is price action that suggests that it's worth placing a bet, okay? Because if the market's coming straight down at you and you don't see anything that tells you that, you know, it may stall and at least bounce, there's no reason to step in front of the freight train. This is an example of a trade setup that I had. It was part of the, you know, subscription service, and I believe I even put it on Twitter. So it might have been a little bit later than my guys got it. But a cluster is the minimum of 3 price relationships. When you see a cluster that has way more than that, in this case it had 7, don't assume that it's going to hold, but just know that it's a very important decision. So if it holds and you get a trigger, great, you take the trade. But if it breaks 7 price relationships, then that tells you something also. You know, it's probably going to at least drop to the next cluster of levels. But this is a case where I'm showing you the lines, and you can probably recreate it if you have some back data. I had a retracement of this swing, a retracement of this swing, a retracement of this swing that came in here. I had a projection of this swing down, projected from the high. I had a projection of this swing down, projected from the high. I had a projection of the first swing down, projected from the lower high. And I also had an extension of this low to high. So I had a 50% retracement, a 618, whoops, that went the wrong way, 618 retracement, 786 retracement, 3 100% projections, and a 1618 extension. All of those came together. It hit, it held, it triggered an entry. And that was a beautiful trade setup. I hope you guys are relaxing, because this is, you know, kind of a relaxed webinar, and I do actually need a sip of my wine. That'll help my throat a little bit. Okay, so that's, you know, an example in Expedia, and you can follow the lines, and if you can learn how to use some of the those price tools in whatever software you use, you'll be able to come up with the same stuff. All right, now I have to show you this example. This is an old example, and this is a chart of eBay, and it's a daily chart. This example is a 2-step pattern where I had the confluence of a 618 retracement of one swing, a 1272 extension of a low to a high, and I had a 100% projection of the first swing down projected from the lower high. That gave me a zone of 51.55 to 79. I also like to call this, besides a cluster, I like to call it my definition of risk, because if it breaks this support, you need to GTFO. Either that or GTHO, you know, depends on whether you blush easily or not, okay? So if it holds here, your typical target, we look for the 1272, but guess what? You know what? It doesn't always work. It broke it in this case, and that means this is a bust. But the good news about this is that you have definition of risk instead of, you know, having the opportunity to, you know, kind of marry a trade that you shouldn't even be in, okay? Because this tells you when you're wrong. All right, let's look at a few more. Okay, now this is actually an old example, but I just want to show you, this is for those who do not believe that there is any rhyme or reason to the market. You probably wouldn't be here if you didn't think there was, though. This is an example in Tesla. This is, I actually put this out on thestreet.com because I also do, I write just one article a week now for Kramer's website on real money. And I found something very interesting on the weekly chart of Tesla. I found that there was a lot of symmetry on this chart. First of all, I found that some of the low to high swings were very similar. 17 weeks up, 17 weeks up, 17 weeks up. You can't make that stuff up. But then when the market started coming down, I noticed something else. I noticed that the low to low swings were also similar. 25 weeks low to low, 23 weeks, 23 weeks, 23 weeks, 22 weeks. We were coming into 22 weeks. So I put out an alert that, I was going to start to anticipate a possible bottom in Tesla just because of this weekly chart. And this is what happened. So it didn't make it at 22 weeks, okay? But it was similar to these lows to lows, because this low to low ended up being, or actually it was from here to here. This was 24 weeks, which is similar to 25 weeks, similar to 23 weeks, okay? Can't make that stuff up. And then if you looked at a couple of other things, you'd also notice that you had a low to low swing that was 46 weeks, and this low to low swing was 46 weeks. So the cycles showed up, okay? The cycles were there. There was some price work there. And even though the market was straight ass down into it, I had to put out that I was going to anticipate a possible counter trend low, okay? I didn't even write about counter trend trades in my book that I did in 2008. I need to write a new chapter because now I'm actually comfortable with some certain rules where you can also have some high probability setups even though they're counter trend, but you have to have both price and time coming together and really well-defined risk. The rally that followed that, I think there was one false buy entry here, and then the second one caught on and it was good. $128 it rallied from that. Okay, so there is rhyme and reason to the market sometimes. Other times, maybe not so much. But when you see it, you can act on it. All right, here's another example. I talked a little bit about symmetry and price, and I use that all the time. But I also use symmetry and time. And some of you may not be that familiar with it, but symmetry and time is just comparing swings in time that are similar. And one thing that I found in Goldman Sachs way back when, and this lasted for quite some time, was that a lot of these declines were similar. 13 weeks down, 14 weeks down, 13 weeks down, and then this was 13 weeks down. And it was 13 weeks down on the weekly chart at the same time that we tested key support at this area, 209, 210 area. That included 5 price relationships, 382, 2 of the 100% projections, 1618 extension, 1272 extension. That hit and held. So even when Goldman Sachs was pulling back over here, it looked like garbage at that point. But I basically said to subscribers that, if we still hold above here, it's still possible that this key low is important, which would take us to a target of 267. You can actually go back. I don't know if all my videos go back this far, but you should be able to go back to some of my old updates and see that that's exactly what we talked about. And we finally made the target. How long did it take? 35 weeks. But what we do is we fit all our shorter term work into, what the bigger picture work would suggest. That's what we're going to do most often. Just a couple more slides and then I'll start to take questions. Sorry if I'm going a little bit late here. Let's see. Here, this was when. You can actually go back and type this in and you'll be able to, well, actually, it might still be there, this video. But bottom line, we had a zigzag or two-step pattern in a support in win. This was posted, I believe, on Twitter. You'd have to go back a ways. You'd have to go back to February of last year, but you should be able to find it. There was 2 100% projections, a 1618 extension, a 786 retracement, and a 618 retracement. Here were one of the projections. This high to low projected from here. This high to low projected from here. retracement of here, retracement here, extension here. Okay, that's the setup. It triggered an entry and it met targets. You had a rally of at least 21 bucks off of that area. So setup plus trigger equals trade entry, and then you manage it. All right, let's look at, okay, so this one was a recent one. And I talked about this when I was at the Traders Expo in November here in Vegas. This is a chart of Netflix. This was the weekly chart. And this was pretty simple. $27.35 was this decline. $27.27 was this decline. This was 26 bucks. I had projected both of these from the new high at that time, looking for possible support. And it hit, it held, it triggered an entry. And I told people that the target was 211, which was the 1272 extension. That's the minimum target. It made way more than a minimum target in this case because it went to 211 and beyond. It got up to this 286 area or $108 rally. I got out personally way too early. Okay. It's kind of hard for me to focus and do this, all of this analysis, but yeah, I got out early. But hey, you know what? It was a setup. If you had the discipline to stay with it, that was very methodical, you might have taken it all the way up here. There's actually another setup on it now, though. Here's an example. This is a daily chart in Netflix. I just showed you the weekly. I'm going to give you a bigger picture trigger because some of you are not going to want to look at, 30-minute or 15-minute charts for signals, but one that you could use alternately or something that would tell you that you're on the right track would be what I use on a daily chart, which is a 513 EMA crossover. Basically, if the 5 is above the 13, you're in a buy mode. If the 5 is below the 13, you're in a sell mode. So in this case, we were already above the 200. We were a teeny bit below the 50 at this point. But when the 5 crossed clearly back above the 13, and you had all the other moving averages on the right side, that's when this started. And I think you had to, did you have to sit through earnings for the rest of this? I think you did. I'm not sure. I don't remember. That's part of the problem is when you do so many charts and when you get to my age, you don't remember all that stuff. Anyway, NVIDIA, one of the reasons why I was suggesting, I remember I got some guy that was pissed off on Twitter, when the market was making the new highs, and he goes, "You cost a lot of people a lot of money for telling them that they should protect profits." I'm like, seriously? The rally here definitely surpassed the rally over here. But once you get to those extremes, where they're similar, you want to pay attention because that's when the market's in a place when it has extended the prior swings, at least 1272 or 1618, that you have to be prepared for a possible correction. And you know what kind of correction we've seen in these last few trading days, right? But this, actually, the real reason for this example was to show you an old buy setup. And this is where I had not only the cluster of price support at 175.24 to 180.54. You're probably going to be able to find this chart on Twitter somewhere. But there are also 1, 2, 3, 4 cycles between December 4th and December 5th. So you had time and price come together within a larger uptrend. It resumed the trend and, finally gave you a beautiful rally here. I think there's maybe just a couple more. Amazon, there was a chart in Amazon. This was in, in my video, end of day video. We had symmetry here where you had a prior decline of $89.50, which is similar to this decline of $88.67. It overlapped. It looks like another smaller projection, high to low, projected from the high. It had a retracement in here of a prior swing. It had a retracement of another prior swing. You had all these price relationships. You had 3 100% projections, 786, 382, 1618. That was the zone. It hit, it held, and it made way more than the initial upside target. Okay, this rally was just incredible. But, you know, we made actually you made 3 targets off of this one and then some. So that's another example of a setup. Setup plus trigger equals trade entry, and then you manage. What else do you notice about a setup like this? Well, the 5 got back, once the 5 got back above the 13, I mean, this thing never looked back. So it's really good to have the 5 and 13 on the right side. All right, I think just 2 more slides here. I did have a really nice setup in BABA that also came from symmetry, a decline of $28.18, decline of $27.17, decline of $27.50, also overlapped a 1272 extension. So when BABA initially started rallying, everyone got excited, and then it started pulling back, and it just sat there for a while. Okay, it was kind of sideways because remember, this is a weekly chart. But because this support held, I knew that my upside potential was at a minimum the 1272 extension. We made that and then some. You had a $41 rally off of this support cluster. Now, when we came back and pulled back into this support recently, it broke it. But guess what? There was no buy trigger, so there was no trade. All right, one last thing is just like an introduction to timing work. I'm not going to be doing timing in my next class, but you know, except for an introduction, but I'll give you an idea that you do actually apply the same ratios that I use on the price axis of the market on the time axis. And here was a great example. You can go back to Twitter because I had this on Twitter. This was, yeah, October 15th, which year? I think it was 2 years ago. I remember we were at a seminar and I posted this, but we had 1, 2, 3, 4, 5, 6, 7. Well, pretty much like more like 8 cycles that came due really close to each other between the 15th to the 17th. And we were trading straight down into it. Okay. And again, you don't just make the assumption that just because there's, you know, 6 or 7 cycles or whatever, that it's definitely going to turn. But you do anticipate that possibility. And that's what happened. Okay, I had no idea that we were going to have like a V bottom like that. But that did occur. You can go back. You can find these cycles there. Okay, you've got to test this stuff for yourself before you believe it. So now I'm going to stop it here. Oh, sorry, Daryl. I owe you some tequila shots. So I'll take questions now.
I will take tequila shots from you any day of the week, Carolyn, as long as it ends in Y. Man, I gotta come visit again sometime soon. Actually, Danielle and I were just talking about how long it's been since we've been in Vegas. So look forward to me coming out to, you know, fix the technical problem sometime soon. Oh, but anyways, yeah, I wanted to get to a couple of questions, but really quick, I just wanted to push this link out to all of y'all. We definitely still have time for questions, but https://www.simplertrading.com/limit. So this right here will actually get you to Carolyn's upcoming class. So Carolyn is going to have an all-day or 4-hour, pretty much all-day session on Saturday, February 17th. And she's also going to have a couple of live trading days where she goes over this exact strategy live. And the really exciting part to me is the live class also includes Danielle for a few hours the first day and then Bruce the second day as well. So really important to see how not just an options trader like Bruce does it, you know, mainly on the Greeks with technical kind of as a afterthought is the wrong word. Technical setup isn't the main thing that he looks for, but seeing how that affects it, but then also seeing how Danielle uses it, which is kind of an amalgam of like a John and Henry style setup. It's going to be really cool. So we have those 2 options on the page right there. We either have the Saturday class, which is going to be going over the entire strategy, and also the Saturday class plus the 20th and 21st live trading during market hours from noon to 3 Central Time. And a couple of questions that I actually jotted down during the presentation that I know, you know, Carolyn was in the middle of it, but I wanted to make sure they weren't missed. Mike said around 7:30, is there an auto fib tool that'll draw fibs? And the answer, Mike, yeah, there are auto fib tools, and they all suck. Pardon my language, but I've played around with them. It's, correct me if I'm wrong, Carolyn, it is much more art than science. The science is important, but
Yeah.
actually knowing, knowing how to draw it, I mean, shoot, I could in 5 minutes show you how to open up the Fibonacci tool in Thinkorswim. It's not going to make you a good chart technician. It's really the why behind it that you have to know. And that's what, you get when you participate in the 4-hour class. When you understand not just how to draw the tools, which, I mean, Carolyn, we're even going to put those homework videos on the page again. So, you'll know exactly how to draw it. We have videos for Thinkorswim, TradeStation. You know what? I should probably go do one for TradingView as well. We have Dynamic Trader class prep videos. We got a lot of stuff out there teaching you the.
All right. Should I just start grabbing the questions here? Did we lose Daryl, or did you complete that thought? Uh-oh. All right. Now the questions are going by really fast, so I'm going to have to like scroll down. I am going to use both Thinkorswim, and I'm probably also going to use a little bit of DT, because Thinkorswim, we're going to have videos on, on how to set up the tools. And then we'll do some of it in there because most people have access to Thinkorswim. But there are just some times where there are things that Thinkorswim can't do, or it makes the chart kind of sloppy. So then I'll go back and forth between, DT and Thinkorswim, and we'll also take snapshots of everything so that we can see it. As far as, there was a question about do some of the other programs count the bars? I don't think that there is one that does it the same way that DT does it, but I think there's a way that you might be able to mark one of the highs or lows on Thinkorswim and pull it forward, and it might count those bars for you, but it's not as easy as this is. Let's see, I'm going to try and take this most recent question, and then I'm going to go back. These are going too fast. So the question is, what is DT? Dynamic Trader is DT. That is the program that I use. I feed it with eSignal data, and then I do all the analysis on it. This gives me the Fibonacci tools that I need, the retracements, or the retracement tool from 2 points, where you can also run extensions by just adding the ratios of 1272 and 1618. And it also has the price projection tool, where I use 100% and sometimes 1.618. Just about everything except counter trend trades is discussed in my book. Even the timing histograms that I use are in the book. Okay, so the only thing that's a little bit different now would be the triggers, because there are other triggers that we use. But the ones that I shared in the book are also still valuable. And as far as the moving averages and all that good stuff, there's stuff on my site. I have the trading plans that share what the triggers are. I mean, they're basically just moving average crossovers, and I've given that out before. I'm not sure if I have access to a place where I can just give you the guidelines on that, but I have posted the guidelines also before on Twitter, so maybe I can do that again. Some of my moving averages are, okay, the question is, are my moving averages exponential or simple? It depends. These are explained in the guidelines. On the daily charts, I use different ones. I use the 200 and the 50 simple, and then I use the 5, 13, and I use the EMAs on the 5 and the 13. On the other charts, all the intraday charts, I'm using the 834 EMA combo. Okay, that's it. All right,
Hey,
let me
Carolyn,
see if I can.
can you hear me?
Did Daryl come back?
Yeah, I'm back. Man, no, that's actually kind of embarrassing. I was talking for a good 5 minutes and I was over on my right-hand side. I was looking at the audio waveform going, oh, cool. Everyone can still hear me. My Chrome locked up. Bad.
Mm.
Well, just wanted to let you know a couple of quick questions that I wanted to answer earlier. I know you heard the Mike auto fib one because that was I heard you laugh in the background. So I know that one still worked. But
Mhm.
uh, just in case, wondering if anyone heard, Joe's question, where to start or when to start would be more accurate. And that's what I was talking about would be more in terms of learning the actual strategy from you in the class. That to me would be the most important time to do that there. And I'm sure I probably missed a few other. But thanks for hopping in. Sorry about that. Just didn't want you to think that I purposely left you.
Yeah, I didn't think it was on purpose. Okay. One of the things I'll just answer that question in front of me is how does the subscription service work? I basically I speak in the simpler options trading room once a day for 30 minutes. I go over some of my setups in there. The rest of the stuff I do with my end of day video, which is typically 20 to 25 minutes long. And it also has all of the chart snapshots that I talk about in the video so that you have trade setups the next day. And then also as part of the service, I do 2 breakout sessions a week where I do requests, so if somebody has a request about, a particular stock that they're looking at, we'll kind of measure it up with the ratios and see if there's a trade setup that we can all use. And sometimes we do. Sometimes my subscribers give me some of the best setups ever. And that's kind of a lot of fun. I do that twice a week. And then also I put out alerts. I don't know if you guys are familiar with, we have a Simpler Options app that you can either download on Android or iPhone or iPad. And I try to put out anywhere from 3 to 5 alerts a day. And I also update the charts as we go during the day. And as a matter of fact, I actually updated some charts last night when I heard that everything hit the fan. Question is, how is TradeStation compared to Thinkorswim regarding the fib tools? TradeStation has the ability to do all of the price work. I don't think it has all the ability to do the timing work unless they changed something since then. And I think the only other problem, the last time I had used TradeStation, which was many years ago, there was not a single line erase tool, and you had to go in and uncheck each line that you didn't want to see. And that can be extremely tedious if you're running a lot of lines and a lot of charts. As far as the DT software cost, that's another question. There's a link on my site for it. It's about $1,000, but you really only need it if you are going to be serious about doing the analysis, and like you're going to do your own trades, because God knows I've been in this business for a long time. I probably won't retire till I'm 70, but you know what? I'm getting close to where I'm not going to do as much as I used to do anymore. So, you want to learn some of this stuff because you never know what's going to happen. Let's see. Oh yeah. And also, I do put out some free videos on Twitter. I did this one last night. The only thing is that I forgot. Yeah, I'm not going to retire for at least a few years, but one of the free videos that I did, this was posted both on Twitter and on YouTube, was I gave you a 2-step pattern in Expedia, and it triggered an entry today. I'm also happy to make the guidelines available, Daryl, if you can find me a place where maybe, can I give you that and you can mail those out with the recording of the class?
Oh yeah, absolutely. I tell you what, if you just want to shoot them over to me on Slack, I'll go ahead and just make sure there's a link right on the recording page. That'd be perfect.
All right. Well, I'll look for it right after I finish answering questions. I'll shoot it over real quick, and then you can all look at it. But that we'll talk about how you use the work. And this example though, this one, you had a beautiful 2-step pattern. It hit, it held, it triggered an entry today. And I don't know if it's going to go to full target, which would be the 1272 extension. But that's a good example of, you know, a trade setup that, you know, that held and it triggered an entry for you. If it plays out fully, which it's probably not going to play out fully before earnings, okay, because that's on the 8th. In the class, I will be showing, okay, someone's asking if I'll show how to create the price clusters. Yes, because we're going to be doing multiple examples. But the first thing that we're going to do in the class is go over how to run the retracements, you know, on Thinkorswim, how to run the extensions on Thinkorswim, and how to run the projections on Thinkorswim. Then you put it together. Then you have to kind of decide the highs and lows. A lot of times people are like, well, how do you know which highs and lows to take? Well, you know what, that takes, actually, you know, I like to call it learning by osmosis, because I had this guy that came to work with me when I lived in Arizona, and he's like, well, which highs and lows? And I was like, well, I just tried to show him. And once I just identified the key highs and lows in like 50 charts, then he was all set, and he ended up writing a book about it and working for a money manager. So, you know, it is possible. The thing I also say, you know, kind of like half joking, but not really, is don't worry if you get confused initially, because I'm a high school dropout. Okay. I ran away from home and I got a job on Wall Street when I was 18. And if I can do this, you can do it. Okay. It just takes a little while to get used to it and to where it becomes second nature. And it's so well worth doing, because you will feed yourself for the rest of your life, you know, as long as you're a good trader. Because if you're not a disciplined trader, it doesn't matter if I give you the high or low for the day, you're still not going to make money. So, you know, that's something that's really important. Let's see, what else do we, well, if you didn't get your question answered, could you please ask it again? Because everything is scrolled back so far that, and then how much more time are you going to give me, Daryl? 5 minutes or what?
Carolyn, you get as much time as you want.
All right. Well, I'll try and, if you ask the questions, you know, what's really funny is I actually did a chart on Bitcoin, but only Bitcoin futures. Because I'm afraid that, you know, if the government comes in and tries to regulate this stuff, and, you know, you just can't make any assumptions about what's going to work. But I did actually take this, and I'm not even sure if this is the right contract to be trading. This, I believe, is the CME Bitcoin February contract, 30 minutes. And I wanted to see how it would work. And the data on the 30-minute chart looked okay. Oh, you can't see my, oh. Yep, let me switch this out. Oh, there you go. Okay, so what I did here was I saw that we shifted from a pattern of lower lows and lower highs to higher highs and higher lows. So I decided to set up this pullback. And, you know, we had this pullback. It hit, it held, and then it made 2 targets on the upside. So it does work here. But as far as have I done analysis on Bitcoin since it started, I've looked at it in TradingView, but I don't have all the data that I need in here to do that. So I have not. So I'm not going to give you a bigger picture opinion on it. Okay, what do non-day traders do differently than day traders? Well, one of the things that you can do is you can focus on the swing trades. On the end-of-day updates, what I do, well, actually, you know, I do them, but, you know, you can learn how to do your own, is you can use a trigger for a swing trade, which would be, you know, rather than a 2-minute or a 5-minute chart trigger, you would wait for a 15 or a 30-minute for an entry for a swing trade. And if you can't really be around to watch the market, for example, okay, this is an example of a little bit of a 2-step pattern in Lulu. We hit the support. Now, if I could show an example, let me just see if I can get my trigger chart real quick. But bottom line, once you get a trigger, and this was Lulu. Yeah, well, 5-minute would have come in pretty quickly. 15-minute. Yeah, so you got a 15-minute trigger. The trigger in this case was you took out a prior swing high and you had the 834 EMA crossover to the upside. So you can buy Lulu with your max risk. You know, it's a little bit far away from where your defined risk is, but your max risk is going to be, you know, under here, but you can define your risk under here. But you did get the signal. So the potential upside target's this 83.83 area. So what can you do with that? Well, look at the potential target, look at where it's at, and you can say, well, maybe I'm going to do, you know, 79.85 call spread or something like that. You know, you can do a spread where your risk is clearly defined and you don't have to worry about watching it every second, though some people actually like to do that. I'm going to be using Thinkorswim in this next webinar. So that's where I'll be going over those tools, but I'm also probably going to use this one a little bit. You know, as far as those triggers, if you can go to my free videos on, let's see if I can find the YouTube page, Simpler Trading. Let's see if you can find it. Because these will go over, if you find the videos under Simpler Trading.
Okay, in today's video, we're
Whoops.
just
Oh, shut up already. Okay, there we go. But you'll find these on YouTube. And a lot of the examples will show the trigger. You know, and bottom line is this is a little bit of where it's not a perfect science. You know, you want to see that it's taken out for a buy, a prior swing high. But sometimes you'll say, well, what about this one? Does this one count or does that one count? That's the one where, you know, I can't come and look at everybody's charts. As long as you see a pattern shift and you see the moving average crossover, you can take the trade. But that's what you can do. You can go and watch probably at least 2 examples or 2 of the free videos every week is going to have an example of a trigger in it. Okay. Question is on Lulu, could you have looked at a trigger on a 5-minute? Yes, absolutely. But then you don't want to keep the trade overnight unless it also triggers for a swing trade, which means that you can keep it overnight. Okay. So let's see, what else do we have? NVIDIA. We don't have anything in Win. Okay, we did this Expedia. We had actually a beautiful setup today. The only problem is we've got earnings on February 13th. And we have a trade set up in Baidu, 212, 216 area. All right, so here's a question. For the daily chart, do you use a 15-minute or a 30-minute trigger? Either one. The 15-minute chart is the aggressive swing trade trigger. The 30-minute chart is the not so aggressive swing trade trigger. Okay, you can also use a daily zone with a day trading trigger. So for example, if you can see my chart now, you can see that we had a zone 212, 215 today in Baidu. Let's see if we looked at a 2-minute chart, would you have seen a buy trigger? And you would have. Okay, in Baidu, okay, it hit the zone back here, and then here's a trigger. It had the moving average crossover. Then you look to the left and make sure that in the process that you also taken out a prior swing high, or you wait for it to take out the prior swing high. So right over here is where both of these things occurred. So it was okay to buy Baidu for a day trade today. Okay, but you can also wait for the trigger for the swing trade, because if this big old 2-step pattern is going to play out, then the potential upside target is 291.01. Oh yeah, and by the way, Bruce and Danielle are going to be working with me in the live trading part of the seminar. Danielle is really good at working with newbies, because I remember when she came to a class and she was very, you know, confused initially, and she's like, I just don't get this trigger thing. And I said, just sit down. And by the end of that conversation, she then knew what a trigger was. And it's not that difficult. I am going to give Daryl the guidelines that talks about triggers, and that'll be in the your email with the recording. But one of the things that you want to see that's kind of very cool about this particular setup, and this was something that one of the subscribers in the room brought it up. This high to low in Baidu, $49.47. This high to low, $49.77. You can't make that stuff up. Okay, and yes, can you set these up on Thinkorswim? Yes, you absolutely can set them up on Thinkorswim. I already have videos on my site on how to set them up, and you'll also get a copy of the video on how to set it up in advance. Here's a question. Do I have a particular way of finding my setups within the various tickers? I have a set group that I analyze and a list, if I can find it, and I know I have it in here. Where's my, it's probably showing up underneath somewhere. Oh, here it is. So the ones that I do every day, S&P futures, NASDAQ futures, gold futures, crude futures, IWM, Apple, Tesla, Facebook, Google, Amazon, Goldman Sachs, Netflix, Win, IBB, TLT, Baba, NVIDIA, and Baidu at the moment are the ones that I do every single day. And then I've added other ones. So lately now I'm doing LUV, Boeing, Expedia, though it becomes a crapshoot with earnings. COHR, we had a setup in that one. We've got a setup in Target, got a setup in Ulta, got a setup in Lulu, have a setup in IBB via the weekly chart. I have a lower decision in Baba we fell short of, and I have timing at this last low in TLT. Okay, but anyway, I'm not going to go any further. I think everybody should probably just go back to the video later. You can always, do a trial of the room if you're interested. You get the whole service, if you do the trial, you'll get the whole service for 30 days. By the end of the 30 days, you're going to know whether or not I can help you make money. And I know that it's possible because I know that a lot of my people are making money. But if you want to learn how to do it on your own, then that's what the next class is for. Okay, and if anybody has any really intense questions for me, if you, I don't know if you can just write to support, it will eventually get rerouted to me and I can answer your question from there.
Yeah, absolutely. If anyone has any questions, yeah, fire them into support. Carolyn has an inbox there. So do I. There's actually one question that I was just about to type it to everyone, but Basant asked, well, Daryl, then can I ask you also when I need help on toss? Yeah. So if you just email support@simplertrading.com, I mean, I have an inbox there too. If you guys have questions about setting up the tools before the class, absolutely. But when you watch the class homework videos we're going to put up there for you, you should have, you should know everything about the how. You'll still need to know the why to set up the tools and where to draw them. But yeah, if your main question is just, how do you get the tools or how do you start with it, then yeah, that information is going to be given to you right away. And if you have questions, shoot me an email, support@simplertrading, and I will absolutely answer them for you. Trend Trader, you have a higher level of intelligence besides the husky voice. I don't know about that. I mean, I do have the husky voice for sure. Minnesota Paul says futures are 24 hours, do a day trade. You haven't had enough today? Man, you're an addict. All right, guys. So there's no, Jamie is asking, like, what's the deadline to sign up? There's no deadline. I mean, take a look at it and see what you think. Sign up. We're going to be holding this class a week from Saturday, and then also live trading on the Tuesday and Wednesday of that week, 20th and 21st, with Bruce and Danielle. So take a look, sign up, and yes, we will absolutely be sending out an email copy of this webinar. So
yeah, and I found the guidelines, so I'm going to shoot these over to you. Yep, I'm going to shoot these over to you.
Perfect. Well, thank you very much, Carolyn. I will get those guidelines on the page and we will fire out that recording as soon as it is available. You know, we always quote 24 to 48 hours, but I'd be surprised if this recording isn't up in about an hour or so. But yeah, thank you very much. If you have anything else to add, Carolyn, feel free. If not, I'll just leave you all with this. Just go to simplertrading.com/limit to learn more. If you have any questions or anything we can do to help you out, just shoot Carolyn or me an email in support@simplertrading.com.
Yeah, and thanks for coming. And I hope that gives you at least a little bit of an idea of what I do.